Okay, so I wanted to take a minute and figured I would record this because it can benefit some other people. And let's talk about the Small Business Paycheck Protection Program. So a lot of people know about the EIDL from the SBA, right? So the SBA is offering right now the EIDL, the Economic Impact Disaster Loan, and it's available in most states at this particular point. And that particular program is a loan program, right? So the EIDL is intended to be a long-term loan program. And loans can be granted for up to 30 years, right? So up to 30 years. And it currently has a fixed interest rate of 3.75%, okay? Which is a really good interest rate, especially for small businesses. A lot of small businesses aren't used to getting that low of interest on loan money. And so that particular program with the EIDL, what they're doing, what they're looking at with that is to be able to use those funds for the operations of your business, right? So using those funds, essentially you can do things like refinance other debt that you have in it, with the exception of things like mortgage debts, okay? You can use it for virtually any operational cost that may be necessary in order to maintain your business, right? Simplified underwriting in that particular loan program. There's tons and tons and tons of money that they're loaning out for the purposes of keeping your business open. Right now, they're also offering a $10,000 emergency advance. Okay. Yeah, that's not a grant. It's essentially an emergency advance on that one. Okay, and so right now, when you fill out the application form for it, you can go ahead and put in your business's routing and account number, and you put in the business's routing account number. If you're approved, then they'll go ahead and deposit the $10,000 into your account and be done with it. That's a good start, right? And so that's an easy way to get things rocking and rolling with that. The Small Business Paycheck Protection Program is a little different, okay? And so this, the EIDL is by and through the SBA, right? The Small Business Administration. So the Small Business Paycheck Protection Program is administered through the SBA by banks, okay? So it is a program that is an SBA program, but virtually any SBA approved lender can take the application. They're using the banks to help process this stuff faster, right?
Which makes sense.
It makes a lot of sense, absolutely. And so the key here is that, you know, if you take all of these SBA, which are thousands of SBA approved banks, you can find a list online, and I'll give you guys a link to that. But there are quite literally thousands of SBA approved banks and all that. It's a very simplified application, which we'll get to in just a minute. All right. So this particular program is intended to provide funds for 8 weeks of payroll. So essentially, any small business can apply for this, and a small business is any business that has less than 500 employees. Okay. Less than 500 employees, and so we'll talk about the qualifications and all that in just a second. But so in addition to the funds for 8 weeks of payroll, they will also provide an additional 25% for operational costs. Okay. Now, operational costs in this scenario, you can essentially use it for any operational costs. But what you want to use it for, what you want to use that 25% for would be interest on mortgages, rent, utilities.
Do you, well, I know the answer.
It's okay.
I'm just looking at would you want to chart that more so directly for when the time comes later on? Well, mine will be taken care of through QuickBooks and accounting though.
Yeah. I mean, you're definitely going to want to track this stuff. Now, what they're not saying as of right now, they're not necessarily saying that, okay, we're going to put this money in this particular pot and you're going to draw checks off of this particular pot. All you have to do as of right now is prove that whatever the dollar amount that you were given, that 75%, right? 75% of that dollar amount you spent as payroll expenses, right? 25% of the amount went to operational costs, interest on mortgages, rent, and utilities, okay? Now, the reason why you want to do that, okay, is because this is a loan program, all right? In the event, as long as you spend 75% of the money on payroll and 25% on approved operational costs, then after that period, you can actually apply for loan forgiveness. The loan itself turns into a grant, right? That's the most basic way to think about it. Okay? So it's a loan, all right? It is a loan at a fixed interest rate of 0.5%. Yeah.
Staggering.
Yes, I know. Be careful.
Yeah.
Right? So it's a loan at an interest rate of 0.5%. However, as long as you use it in this manner, then your loan will be forgiven. The purpose of the program is to help keep businesses from having to lay off employees and put them on unemployment. A large portion of the problem right now is the unemployment system is completely overloaded, right? And so it's going to take a lot longer for people to be able to get and qualify for unemployment than they normally would, right? So the government essentially is saying, look, don't lay your people off. Don't lay them off. We'll get you the money to go ahead and cover payroll expenses, and that's all payroll expenses, okay? So we'll get you the money to go ahead and cover payroll expenses for the next couple of months. And also at the same time, because you're doing that, because you're covering payroll expenses for these people and keeping them at work, we're going to give you a boost of an extra 25% because you're administering it, not the unemployment system. You're administering it, so we're going to give you a boost of another 25% of free money as long as you use it, interest on mortgages, rent, and utilities.
That was a big light that just went off. Thank you.
Yes. So essentially, that turns all small businesses, into the unemployment office, right? Now, it's also meant for you to be able to keep people at work, okay? So what they're not expecting is they're not necessarily expecting you to have people park their butts at home and you continue to pay them, right? If that's what you need to do because of the nature of your business, that's what you need to do. But if you need people to be able to work from home and you need them to be able to do whatever it is, then by all means, you're still paying their payroll just like you normally would. It's just your payroll costs are being covered, right? So that way you're not having to pay for it out of pocket. Now, as of right now, for small businesses, there are 3 important dates. Okay, 3 important dates: April 3rd, April 10th, April 13th. I like that last one because it's my birthday. Okay. April 13th has the possibility of being the 17th, but as of right now, it's the 13th. So, here's the deal. All small businesses are eligible. All small businesses are eligible. So, that includes, that's all small businesses, 500 or fewer employees. That would include nonprofits, veteran organizations, tribal concerns, self-employed individuals, those kind of things. So all small businesses are eligible for this. Okay? And so starting April 3rd, small businesses and sole proprietors can apply. Yes. Starting April 10th, independent contractors and self-employed can apply. Starting the 13th, initial funds will begin to be released. Okay? So it's why you want to apply as quickly as possible, because these things tend to be processed in order. All right? So small businesses and sole proprietors, essentially what they're looking at on April 3rd is anybody that has employees. Right? If you have employees, they're going to allow applications in starting April the 3rd. Okay? Independent contractors and people that are deemed as self-employed can apply starting April the 10th. These are people that don't have employees, but they are still self-employed of some kind. So if someone is working for your business and they are paid as a 1099 independent contractor, they can apply for themselves. You do not have to apply for them. Okay? Now, that means that, again, the ideal here is this is not necessarily unemployment. This is a Paycheck Protection Program, right? So if they're going to apply, then they realistically need to keep working in some way, shape, or form. Yes?
501(c)(3) churches.
Yes. That's 501(c)(3) is considered a nonprofit.
Their dates are the same.
April 3rd. It's a small business. 501(c)(3) is most of them are S corporations. And so as an S corporation, it would be considered a small business. So it's a nonprofit S corporation that has 501(c)(3) status. Okay. So a church, most of your churches are going to be at April 3rd. Absolutely. And so you can apply through any existing SBA Section 7A lender. Okay, the list is pretty long. Any federally insured depository institution, federally insured credit union, farm credit institution. So the list is pretty long of places that you can apply. They want to stretch it out to as many places as possible for businesses to be able to apply. Now, the one caveat to this, there is a bank of $349 billion. I don't know why I put billions. There's a bank of $349 billion that this money is coming from. They fully expect for all $349 billion to be applied for. Okay, so put that in perspective is why I say if you can apply, get your application in as quickly as possible. Okay. Yes.
This is separate to what I'm doing, right?
Yes. All right. So when you're looking at this kind of stuff, the key here is we want to do this and do it right so you can get that loan forgiveness. Now, if you are a business, so the one other caveat to that, if you do not meet these requirements right here, then it is a loan and the payback date is 2 years. Okay, so you essentially got 2 years to pay it back plus the 0.5% interest. Okay, if you didn't meet the loan forgiveness requirements. One of the other, outside of this right here, one of the other ways that you don't meet loan forgiveness requirements is by reduction in headcount. So for example, when you apply, one of the questions on the application is what's the head count, right? How many people, okay? So if at the end of the 8 weeks, if you have a reduction in head count, then the percentage reduction in head count will offset the forgiveness, right? So for example, again, making it easy, if your head count has reduced by 25%, then the forgiveness amount will be reduced by 25%. The balance then becomes a loan, right? So you want to make sure that, again, the key is keeping people on payroll. However, you do have some time. So the caveat here is the reduction in head count, right? So if you reduce your head count during this time, then you have until June 30th to replace your head count. Okay. So essentially the way the loan forgiveness is going to work here is as long as you meet these two requirements, then you will be able to have loan forgiveness. If you reduce the head count, then the percentage of loan forgiveness will be based on the reduction in head count, right? So if you have 10 employees and you laid 3 off, that's a 30% reduction in head count. So in general, that means that 30% of that loan will not be forgiven. You have until June 30th to replace the head count to meet the loan forgiveness requirements. Does that make sense?
Yeah. I got 4 people, I lose 1, I just lost 25%.
You 4 people, you lose 1, you just lost 25%. Absolutely. And so essentially what we have to do is we'll have to fill out an initial piece of paperwork, and then we'll have to be able to provide something to the lender showing this is what our full-time head count is, so on and so forth. Independent contractors and self-employed people can apply. So these people typically don't have actual payroll statements, and so they're going to use tax documentation in order to be able to do that. So essentially, we'll have to do most of that kind of stuff. Now, one of the key thought processes that from what we're hearing from lenders at the moment is they will go ahead and process the initial paperwork and the loan based on your statements and certifications on the actual paperwork. Okay, they will not request verification of payroll, mortgage interest expenses, rent, utilities, and those kind of things. They will not request that until the end of the 8 weeks. Okay, until loan forgiveness is applied for.
Get past the struggle.
Get past the struggle, and then get the documentation and all that kind of stuff together. Right. So
how do we go about applying for this one as far as it's all online and or going to the teller window?
So with this particular program, it's a good question. I am going to provide you with a link to the paperwork, and you will download the paperwork. You must print the paperwork. The SBA does not allow electronic signatures, scanned signatures, anything like that. They do have to have wet signatures. So essentially, you fill out the paperwork, and you're going to need to take it and drop it off at a teller window at an approved financial institution. Okay, so pretty easy stuff to be able to get done. The actual paperwork itself, the application is front and back, one piece of paper.
So if they don't accept an electronic signature, does the paperwork have to be signed in the presence of a teller or?
It does not have to be signed in the presence of a teller or anyone like that. It's just the SBA wants, for whatever reason, they're not, unlike the EIDL, where it's all of the beginning parts of it are processed electronically. But this is a program that's going to take a while for them to process everything, right? So they want wet signatures as verification. I can only also assume, because of the potential for essentially scamming the system, right? They want actual wet signatures and physical drop-offs to make sure that they're able to manage it as well as possible during this kind of time. I mean, you have to think, there in the United States, there are roughly 26 million businesses that are defined as small business, right? And so, you got 26 million potential pieces of paperwork that they have to process through. They're using all of these thousands of banks to be able to do so, then speed up the process essentially. But, they also have to try as best as they can to offset fraud and so on and so forth. So, effectively, this side of the paper right here is business information. It asks average monthly payroll. So this is your average, 2 times that amount equals this, and number of jobs, right? Down here, it's asking for the owner of the business information. Some certification questions here. Certifications here, right? So this is the only thing that's given any numbers, right? The rest of it's just certifications and a signature, right? So
how do you find out if your bank qualifies on that, and 2, if your bank does not?
So I'm going to provide a link to SBA Approved Lenders. 1, you're also welcome. You can call your financial institution and say, "Hey, are you guys participating in the Small Business Paycheck Protection Program?" Right? They'll let you. They'll know exactly what you're talking about, and they'll let you know immediately. Right? So every financial institution is going to know. But essentially, if it's a bank, right? Essentially, if it's a bank that is FDIC insured, it's approved, right? Most of all of your credit unions that are federally insured are approved, right? So you have to look at that kind of stuff. The idea here is that, like I said, this SBA Section 7A depository institutions, federally insured credit unions, farm credit system institutions. Not all farm credit institutions will participate, right? So we'll get a link and post it so that way you can have have a link on that kind of stuff. I'm going to post a copy of the video here and some additional information online, so that way everybody will have access to it. The key here is that we want to get this out as quickly as possible, so that way you have the capacity to see and get applied, get the money, and get all of it as quickly as possible to the initial fund distribution, right? So that way you can go ahead and continue paying payroll, no issues, no worries, and as long as you meet the requirements, this is free government money.
I don't think I know the answer, but I had proposed going to a 35-hour-a-week for about 3, possibly 4 weeks with my guys. If I did that,
You're reducing payroll. So if you do that, go into a 35-hour week versus a 40-hour week, you're reducing payroll. So if you're reducing payroll, then again, they're looking at is 75% of the money that you've been given using for payroll costs. If it is not, if you use a higher percentage than this for operational costs, then the loan forgiveness will be changed. If you use a portion of it for costs other than what's listed, right? And I'll post the balance of the list online. But if you use it for other than what's listed, then you risk that loan forgiveness, right? So the key is they don't want you reducing people's hours. They don't want you reducing people's paychecks. They want you paying. They want you keeping these people working if at all possible. They want you continuing to pay the paychecks. They're saying we're going to cover it and we're going to give you some extra money for your troubles. Right? So that way you have that possibility. We're helping, as business owners, we're helping manage this and keep people off of the unemployment system. As long as you're helping manage it and you're using the money right, they're going to give it to you as free money. If you don't, now you've just taken yourself out of loan.
Okay, so it goes in general fund. Say you're approved to get the check for 10 grand or 12 grand or whatever it may be, and then it goes into your general fund and you just approve that payroll status.
Yeah. So essentially, you get the money, you're going to drop it in the business bank account. So it's not, they're not requesting, at least as of right now, they're not requesting segregated funds.
The reason I'm asking is because that job I did that was the blow up.
Right.
That check should be hidden within the time frame, hopefully.
Oh, absolutely.
It's going to show an excess, but there's a lot of bills coming out.
Oh yeah. I mean, it doesn't matter what else you've got going on. That's not, they're not looking at your bank account to figure all that kind of stuff out. At the end of it, what if you get a check for, let's say, $20,000, at the end of it, you get a check for $20,000, then $15,000 has to be payroll. $5,000 can be used for these other expenses. And you're going to essentially prove that you spent $15,000 on payroll and $5,000 on these specific expenses. Because if you have an automated payroll system, absolutely, then all you have to do is print out your payroll reports from that particular system and then show them, okay, this is my rent receipt, these are my utility receipts, right? I paid this much on the mortgage interest. So, and you're good to go. No problems, no worries. It's not meant to be a big hassle for us on the back end. It's meant to be simple, but it's also meant to keep you honest, as saying, hey, you asked for this much money. We gave you this much money. Now prove to us that you spent it right. Make sense?